So welcome once again, everybody. So we are here for our weekly discussion. So it's a basic idea here is simple. So if you are new or if you know, some of you are very long with us in terms of as a subscriber, I think the main goal here is to discuss and try to filter the news around. So we are not going to repeat what is going on in the news cycle. We are not going to talk about how the world is interpreting. Let's focus on pure data. And would welcome any questions. We usually start with the weekly review of the market. So I'm going to share the screen and look at the charts. I mean, this is because what we believe strongly is the charts tell their own picture rather than looking at news. If you look at the price, you have to trust the market. So now coming back to where we were, and we have been discussing every week, we were originally, if you remember, we were tracking. I think the April is behind us, when which is a huge dip. We are scaling new highs, 6,300. We made a brand new high here. And remember that where we are sitting in terms of a time cycle, like we have not resolved anything on trade deals. It's purely based on, market was oversold. People were pessimistic around the impact of tariffs and trade wars. There were a couple of actual wars also, like, we had the whole Israel-Iran conflict, which we went through. So whatever you can think of, market has seen almost all kind of worst case scenarios, and still it has chugged along to new highs. Why is that? We have talked a few times. I'm not going to repeat it. It's a pure liquidity driven market. We have a lot of M2 money supply worldwide is growing. Asset classes are all making new highs, whether it is stock market, whether it is gold. While gold is, of course, consolidating it, but it has been on a big run for, multi-year run, which we have been talking about in Proflex for quite some time. Similarly, Bitcoin, I think we are in a similar domain, right? Means ultimately, it is getting more and more adoption, more and more recognition. And as an asset class, there are very few quality asset classes where people can trust. And we are seeing again all-time highs. But coming back to, let's talk a little bit more about markets. So usually, I think if you look at historic data, I don't have it in front of me right now here, but when you break all-time highs, either you face resistance, which is what we were expecting, but we did not see that resistance. So typically, if you look at the history, when the all-time highs are broken, usually the run-ups are huge. Like sometimes they go up 10, 15% in the next 12 months, or sometimes even more. And that is the historic data. I'm not suggesting this is going to happen this time, but let's keep that in mind. We have to avoid the thinking that all-time high means that we cannot go higher, because it's a psychological thing when we see, oh, we are at the high, so it's a sell time, it's not a buy time. So I want to first of all reset that expectation that historically that is not true. And this is exactly why we have markets, when we say that look at 20 years, 30 years and market, we always have this saying that market only goes up. That means all-time highs are there to be broken. So first of all, we have to remove that from our mindset that we are at highs, so it cannot go higher, it can go higher. So what are the triggers? The triggers, as we said, is still the same. We still have, we already have some of the triggers, like the tax bill was passed and so on, which was expected, which was given since the Trump administration, started, because that was a basic promise. But I think market is also, in terms of tariff, it's actually worse than where we started, because even though we had this whole negativity around tariff and that got resolved, that the worst case is removed, but still there are tariffs. So imagine now if we have a trade deal with China, imagine there is some positive news that can still give you another push, because we are talking about another uncertainty getting removed. But what is the most important thing? That is the next 2 weeks. So next 2 weeks, we are going to see earnings, which is ultimately, if we forget all the noise of this last 6 months, this whole rally, we are talking about multi-year rally, which is going on. It was purely AI-driven rally. So now we are back to, these are the 2 weeks in every quarter where the market starts focusing back on earnings. And that's when we have all this Mag 7. Of course, the big player like NVIDIA doesn't announce for another month because they have a different earnings cycle. But because the customers of NVIDIA or something like, all the other players, even Avago doesn't, like semiconductor people don't report at the same time. But if you see whether it's Meta, whether it's Google, whether it's Amazon, all these are the customers of them. So, and already if you are paying attention to TSMC came out with the earnings, they already talked very positively and their earnings were great. And they talked positively about the AI growth continuing. So now that is where I think we are looking at. So next 2 weeks, we are going to see Apple, which is still not recovered from, it's way away from all-time high when S&P going all-time high. So there's an opportunity there where market can keep going up. We have Amazon, which has not recovered to its all-time high. You have Google, which is far below its all-time highs. So you have this opportunity for them to show in earnings that they can all take the markets up. The second thing is, while AI boom is continuing, now NVIDIA, means I was just looking at the run. Like even if you look at from the bottom in April to now, we are basically sitting on more than 100% rally. The stock has almost doubled. Of course, that was a panic and that was a meltdown, but still having a price rally of 100% in something like Nvidia or even something like Avago, like it has from its April low, it has almost doubled or actually doubled. So some of these, even the same situation with AMD. So there are two factors to play. While I showed you that many of the mega caps are yet to get to their all-time highs, like Apple and Amazon and so on, so earnings can push them high, but something like Nvidia, Avago, they're not necessarily going to go high because they are sitting on expectations. So even with a great earning blowout, they can actually correct. And we have seen this before last year, many times when market used to ask why Nvidia came out with bumper quarter, very good earnings, why it's crashing, because you always look at what is the expectation being built in. Of course, the big news on this NVIDIA and Avago of the world is that we are seeing the new positive news around China licensing coming back, and Trump administration, especially Lutnick, had given public statement that they are going to approve selling to China at a third or fourth level chip. Basically, what they're saying is the H20, which is the not the latest and greatest like Blackwell, but they are basically NVIDIA has been pitching for why are we not allowing that. And the positive news last week, which came out, was that we are going to allow that to be shipped. And that is not yet confirmed, but I think it's almost official with NVIDIA CEO making a statement and Lutnick from administration making a statement. So I'm assuming it's a given thing, and that's what market is assuming. So now the question is, what can earning throw at us? Maybe can we get new news? Whether we can keep running, we have already talked about it. Yes, when you are in the blue sky zone, when you don't know what is the top, because there is no technical pressure, there is no supply zone. So demand and supply can still push it up. But now we cannot predict these things. But what I'm trying to highlight here is market can go up. There's a lot of room. There can be readjustment, rotation, because some stocks are at their all-time high and new highs, while others are still yet to catch up on their highs. There are some concerns around them. So all these factors will be at play in next 2 weeks, and we have to watch out how the earnings play out, and we will start seeing more and more. One more thing which I would like to highlight, which we were discussing in the our WhatsApp group also. What we saw, one tech earning which has come out is Netflix, and if you take out they came out with these reasonably okay numbers in dollar terms, but the commentary was that the dollar devaluation helped them almost 10% because of their foreign revenues. And by the way, if you are aware, Amazon, Google, all these companies, even Apple, they have a lot of foreign revenues. So there's a big tailwind because of dollar devaluation. So that is another thing which I think we have to be aware of. So let's talk about DXY, which is the dollar index. Now, if you see why this is the case, means ever since Trump has come into the office, of course, we had initially means of course the win is the election, but if you see ever since he came to office, we are only going one way down on the dollar index, and this is going to work in favor of the earnings. Remember that in terms of dollar numbers, because all the foreign revenues get marked in dollars at a higher price. So this is where I think one thing which market is going to expect, and that can really provide. And we have been talking about it. I think we did touch base on this in last 2 weeks also, that this is going to be expected. So some of these tailwinds are there for earnings, and as we said, this can be taken positively by the market when you actually see the numbers, and that's where the room comes from in next 2 weeks. One thing which we always review in this is what is the other macro factors. So the usual concern is market overheated? Usually bonds give us a signal whether market is overheated. Bond yields start going up if they are worried about inflation. The long-term yields start going up if about in general overheating. We are not seeing absolutely bad numbers on 10-year yield yet. As I have been always telling that 4.5% or 6% is the place where we start getting concerned. We did go up to 4.5 as recent as this week, but we are seeing that it's going down again. Which this I think is a good sign, I would say, and we have talked about why it is happening multiple times. So I keep repeating that this administration is focused on relaxing the SLR. They have already implemented that, and we are the one big thing which I'm going to talk about. Maybe we can take a few questions on the market before we jump into that. Is the whole thing which is happening in the crypto world and the stablecoin world, which is going to be a huge tailwind again for the bonds, as we see the growth of dollar and growth of dollar adoption in the blockchain space. So that is, I think, the summary on the markets. Short summary is yes, we are making new highs. Can we go up? It all depends on next 2 weeks of how the earnings reactions come in. All the signs are pointing to some good positive results because the earnings have AI boom as well as a dollar tailwind, a dollar devaluation tailwind, and there is no real impact on of all the negative news around tariffs and so on. And we have been talking about macro pushing all the asset prices up already. So that's the overall status, and we will discuss a little more about the recent Bitcoin boom, the crypto act, and so on. But let's take a few questions here. I see a message privately here about all access subscription. So we did talk before the call started. So next week we are going to have a all access subscriber call. So we will take the more questions there. But feel free to, if you are not on Discord, please join Discord. If you're all access member, we have a pretty good community there, and you can ask questions to support. So this call is not intended for only subscribers. So we can take these questions in the call, and also on Discord. So feel free to post it there. Coming back to so any other questions, let me know which can be shared
I,
here.
I Raman, one question I read somewhere that the foreign investors, like the foreign investments in the bonds and equities, are going back up compared to the April lows.
Mhm.
Can we consider that as another tailwind going forward?
Sure. So if you have seen some of our data, so I don't have the chart in front of me, but if you go back to the previous, if you have seen our investor day, which we did a few months back, I think in May, I always look at longer term charts. So unfortunately, the news cycle is looking at 1 month data, 1 week data, and they keep creating these headlines that the foreign investors are coming back. But if you look at, I had presented how in last 20 years, the foreign investments is just going higher and higher in US. In fact, I had done a presentation for some family offices outside US, and we did a full data point, like 10 slides on why it is happening. And it's very obvious, right? And I think let's break down. If you are interested in AI, if you're interested in robotics, if you're interested in any cutting edge quantum computing, tell me a single country outside US where you can find publicly investable companies. The only country where you can find such is China, probably, where they are leading in some of these technologies. But other than US and China, no other country even has any one name you can take. So now China, of course, as you know, is not an easy country to invest, and most of the Western capital will not go there. So when you say, so at a 10-year, 20-year level, just because of the technical supremacy of US, you will always see capital flowing into US markets. All the news in short-term news, 6 months, 1 month, 3 months, they will keep creating headlines that, oh, capital is flying away, capital is coming in. That is purely a, news cycle has to create news. What I'm trying to highlight here is I had the data that we have seen at least 10 to 20x multiple of capital which has come in from outside into US in last 10 years. Means the growth rates have been crazy. And this is what we have been discussing over and over again, that there is this whole information cycle. We are living in an information age where there's a heavy concentration of the same information. Somebody in India, in Africa, in China is seeing the same information, probably not in China because of the controls, but wherever the social media is available, everybody's seeing the same NVIDIA headline. I was just looking at Economic Times headline yesterday. There's a huge headline on NVIDIA. Means, why do they care? Because every Indian today can invest into NVIDIA stock because all these brokerages are providing ways to invest into stock directly. So that is where everybody looks at who is a leader. They are going to go invest into US stocks. So I would say, okay, so maybe a long answer for your question, but overall, this has been a tailwind for last 10, 20 years. It's not a tailwind in last few days or weeks. So we don't have to worry about short term. we have to think about, whether US can keep this technical supremacy. As of now, we don't see any challenger, to be frank. Like, um, is there any other country which can, attract any capital at this moment? Means if you're talking about tech, which is what is grabbing most of the capital. Like if you look at the biggest market cap companies, even in S&P 500, everything is tech. So tech is really eating up the capital right now. And that is where I think we also had a discussion around P ratios maybe last week or sometime, when we talked about why PE ratios are higher these days versus earlier, because tech is eating the capital and tech growth rates are crazy. They're not like old economy companies. So many reasons I would say where we don't have to worry about that, and we can always assume the tailwind. The tailwind will be any capital. This is why we look at worldwide M2 supply. Worldwide M2 supply is the investable capital across the world. And out of that, there will be an allocation into US equity, there will be an allocation to Bitcoin, there will be allocation into gold. These are now global assets. US stocks are not only for US investors, they are global assets, just like the other asset classes. So that's how we should think about, and that's what the market is telling us. So, but I think, yeah, these are good questions, I would say, in terms of like, what are the tailwinds? Why do we have the confidence? How can we invest with confidence in US markets? Multiple reasons, right? One is the tech supremacy, one is the money supply going up, so asset prices are going up. So we have to just keep that in back of the mind. And this is why we spend a lot of time. So I think many of you are subscribers or you have attended some kind of our investor day events. So we do cover these things there. And let me tell you that these principles usually help you in keeping your long-term plans and building the confidence. Ultimately, the biggest issue happens is because you react to day-to-day market news and you lose conviction. And that's where most of the people, end up exiting markets at the wrong time. But if you keep this in mind, you don't have those problems because you do understand what drives the market in medium to long term. And that's the goal we are going with. So feel free to, as I said, put your questions here. You can unmute yourself and ask question as well. And I'll give it a few seconds here to wait for that. All right, so if no other questions, let me go to the next topic, which we wanted to talk about Bitcoin. So a lot of people are asking me, okay, is it the, we have been talking about it actually. If you're an All Access subscriber, we are also talking about, the breakout points, and we had discussed why it was a great time in last few months to invest when market was looking to break out. And we got that breakout. We have come to close to 120K, and we are again consolidating, which is very common in Bitcoin world, where we see a breakout, we get new supply, which gets activated. Um, so what is the tailwind right now? So we have two things which are changing. One is we had this Genius Act and there is a Clarity Act. So Genius Act is a stablecoin enablement act. What they're doing is and I did mention it in WhatsApp also earlier. I have spent a lot of time in blockchain world in last 7 to 8 years, and I have seen from inside. I have a lot of industry friends there. What people are not seeing in mainstream is the impact of these digital assets. So what we call it in US, as if you can feel it, the biggest issue has been a lot of time is velocity of money. Stable coins were available for a long time, but banks were not able to issue them. Bank was not able to hold them in, or substitute them or give, have custody of those. All those things are changing with Genius Act. Now you will have banks participating in it. They act like, and these there is a very clear regulation around issuing stable coins. They are backed by US dollars. So they have to prove their reserves 1:1 for every stable coin issued. So you may see a boom of new stable coins issued. And as you know, that stable coins on blockchain, they can settle immediately on chain, and there is going to be a lot more international dollar acceptance when you have this instant settling versus wire transfers versus the long settling process. So I have seen it personally across multiple years, how more and more people, like even in the VC world, I have seen in last 5 years, even before this regulation came, how the sophisticated investors were using Ethereum-based stable coins to send money across the borders when they used to prefer it over even doing a wire transfer, even if they're doing non-blockchain investments. So this is now imagine the velocity of money totally changes with this. Second part is, as you see more and more, like there's not a single, as blockchain is growing, as crypto is growing across the world, there's not a single other stable coin which is in market cap, like, which is the USD level. So you have USDT, you have USDC, and there will be a flood of new US dollar stable coins now with this act. And just like the whole USD economy was built in the banking world originally, and if we believe in on-chain future where people will be looking for blockchain-based settlements, you are looking at US dollar again dominating. This is going to be a huge tailwind for US again, because this is going to totally change how people get used to this easy money transfers, because people are used to paying wire transfer fees and so on, as I said. Now the second impact of this is the US Treasury. Like, as these stablecoin issuance need to have 1:1 provable reserves, they will, when they issue the stable coins, they will have to hold some US dollar asset, and there is only one US dollar asset which is considered risk free, that is the US Treasury. And when the US Treasury is giving you 4%, so imagine for them to issue a stable coin, they're earning 4% on that capital for free. And that is what some of these companies have been doing already, like whether it's Tether, whether it's Coinbase of the world. So this is where I think we are going to see there's an expectation, and I think Besant had made a statement that they're expecting up to $1 trillion in stablecoin economy. What that means is almost $1 trillion of demand coming in for US Treasury from these companies which are going to, or the banks which are going to issue stablecoin. And these stablecoin rails will be building, like, we are already seeing the tokenization of real estate, we are seeing tokenization of all these other real world assets. There's a huge demand. So again, as I said, if you are not seeing the blockchain world of 2021 or the DeFi world, we have already proven all these things which are possible. You're already seeing somebody like Robinhood going tokenizing this private equity, selling it in Europe. So what we are looking at is potentially in next 3, 4, 5 years, a lot more adoption of blockchain-based assets, and stablecoins will be the currency there. Third thing which people always talk about is we are already predicting robotics and AI-based world. As you remove humans from the loop, how do you build trust around payments? So blockchain is the only answer where you can actually verify the payments and settle them immediately without trusting anybody with the machines. So this whole system is going to fit together, and before we realize, if the AI takes shape, if the robotics take shape in next 10 years, you're going to see that the growth of these stablecoins even higher. So this is the impact what I think this particular act is bringing. There were a lot of restrictions for banks, a lot of restrictions for people to use stable coins, which is going away with this act. So I think it's a big deal. I think not a lot of people are covering this right now. But if you are anywhere close to blockchain world in last 5 years, you know how important this is. So this is where I think it's going to be a huge impact to overall economy, not just the blockchain world, but also how it impacts the treasury, how it impacts the velocity of money, and potential new use cases in blockchain in the AI world, in the robotics, where you can actually do better integrations and more secure systems for payments. So that's, I think, the potential here. So this is one thing, and then I think, of course, one more thing I would like to highlight is Bitcoin. I think it automatically gets benefited, because just like when the M2 money supply increases, we have this whole kind of a gold boom or risk asset boom. When the blockchain and money supply increases, most of these companies who are crypto native or who are blockchain native, they believe in only one store of value, which is Bitcoin. So that's another factor you will see, indirect impact of some of these uh, relaxation in currency to see that all the profits, like the reason I have actual examples here, like Tether, which is the biggest stablecoin in the world. All the profits they make from investing in US treasuries, they always invest in Bitcoin. Every year they announce how much Bitcoin they bought. So this is going to be obvious tailwind for, in general, for crypto assets, and specifically for Bitcoin, because that's the only store of value kind of an asset on chain for on chain assets. And then I think other thing which we have covered enough, and I'm not going to repeat it here, is the adoption of Bitcoin, which is growing in the treasury companies. We do have a note going out to all access subscribers on the what is really going on. Like, you will see the latest crypto policy. We are going to talk about the amount of, and I think it's a public information, all of you should definitely search on it, is the number of companies outside US also. Now they are becoming copycat of MicroStrategy. You will see more and more companies recognizing it as the corporate treasury investment, and they call it, like, you can call it inflation. Some people are justifying it because of inflation hedge. Some others are justifying it as a speculative bet, and some others are just doing it as a diversification of their treasury. Either way, not everybody is doing MicroStrategy, but people are justifying more and more ownership of Bitcoin on the corporate entity books, instead of cash, which is going to blow up. I think that's what is already happening, especially with the success of some of these treasury companies, which I think once it goes global, we have pretty big companies in Europe and Japan, which are already started this. You will be surprised how fast this can snowball. So that is, I think, my comments on what's going on in the Bitcoin world, and we are tracking very closely. So feel free to ask any questions. But again, I think overall where we are today is we are this something called like lag from the what is M2 money supply, which we have been pointing to. So risk assets are going up is not a surprise. It's a matter of whether sentiment allows you to invest, whether you hold that money supply as a cash on sidelines, or you actually invest. Those two things are what define the short-term moves. In long-term move, all these risk assets are going up is not a surprise, which we have been talking for many months and years now, that the tailwind is always there. All right, so go ahead.
On again, and we've discussed earlier, like I've been skeptical of MSTR, but the reason MSTR trades at massive premium to the amount of Bitcoin it owns, will that premium evaporate away if there is a democratization of the concept everywhere? So are we looking for a sharp decline in MSTR price because of this?
So I think first of all, there is a misunderstanding of why the premium exists. Means because it is not a standard product, it was an innovation on how this product is built. So premium exists for a reason, because let's say in a long term, if you're owning one share of MSTR, you are basically expected to grow the number of Bitcoins owned in that one share continuously. That's what they capture as a Bitcoin yield. Now, why do you buy a preferred share of any company for $100 when it only gives you $10 per month? Means it's only going to give you $100 back. But but if the yield of it's a very basic concept, I think, in finance world. Now the bond, which is $100 and it was issued at a 10% coupon, if the yields are 5%, the bond will go up in price because the yields are falling. So what you're seeing here is a very simple phenomenon which nobody understands, because people are used to dollar yields. And this is why traditional finance world does not understand MicroStrategy. They are basically creating a Bitcoin yield. So it has to quote at a premium versus ETFs, because ETFs are 1:1 Bitcoin. You will never gain it. In fact, you will lose 25 cents on every $100, because there's a 0.25% fee, which ETFs are charging you. What MicroStrategy is giving you is whatever Bitcoin you buy today, in 10 years, it will be growing at a certain yield. Last year, they gave 60% Bitcoin yield. This year, they're already up to July, they have generated 20% Bitcoin yield. So that's why market is pricing at premium. It is not a kind of unjustified premium. It's a question of whether you believe in that yield to be continuing. So the question to ask is whether they can keep generating this Bitcoin yield in future. Yes, that is not guaranteed. There are a lot of factors which, as you said, the competitive nature, but because they now hold 600,000 Bitcoin. Nobody is anywhere close in competitiveness. So even if 100 companies come, the safest asset to invest in, if you're raising debt, which is Bitcoin-backed debt, then it is going to be MicroStrategy. So I don't see other companies coming in as a negative factor for MicroStrategy. Whether I believe the premium is justified, that depends on a lot of factors, which I do not know. In future, the premiums may be lesser because the yields are going down, because you cannot justify the kind of yields they're getting right now at the scale they have now become. So rather than worrying about other companies, I would say, can they keep generating double-digit yields on Bitcoin per share in their common stock in near future? That is a bigger question than why they're quoting at a premium.
Can
So
you
I don't know if
expand on Bitcoin yield once again, or maybe we can take it offline in
I
another.
think means I'm not even the best person to explain this. You just search Michael Saylor explanation of he has done it. If you just watch the MicroStrategy earning calls, last 4 earning calls, you will get every answer. They have some of the best presentations on what it means. Even if you just download their presentations from strategy.com, you will get all the details. So let me not even try to explain what they do best because that's their product. But what I'm trying to highlight here is that these are all valid businesses in a certain scenario. Whether the scenario will hold or not, that's a totally different discussion. All of these have a breaking point, and that is true for every company, right? Means one breaking point for NVIDIA can be thought about is what if there is no scaling of AI beyond certain point, and people say we are done with training the models. And this was discussed as recent as DeepSeek moment earlier this year. There was this whole discussion around NVIDIA is over because DeepSeek has come and suddenly we don't need more and more GPUs. So that was proven false. What I'm trying to highlight here is theoretically there is always risk in every investment you make. I'm not suggesting this is safe investment or anything. All I'm saying is they have a case which is working right now. They have a product which is working, and more companies are doing it and making them sustainable. Now, whether Bitcoin will continue going up, that's a question you need to answer. Whether Bitcoin yields will they will be able to generate Bitcoin yield is a totally different question. All those will define whether you will have the premium sustainable or not. So, and we are already seeing it, like the premiums used to be 2+ and now it's 1.6, 1.7. Those are the levels. So the market is already questioning them. So market automatically self-corrects. So as I say, all you need to do is to double click on the data. When billions of dollars go into something, they have a reason. They are not just gambling. Yes, you may not understand it. Yes, some of the analysts may just talk about why this is a bad investment, but that is not how the markets work. This is what I've been discussing it, in many different forums. I always talk about this, that there's this whole very high conviction from some analysts that it's something is a Ponzi or something is a bad investment or something is obviously overvalued. Those are all views. They are not facts. The fact is, what is the price of that thing? Somebody is betting actual money. That's a fact. Somebody having an opinion is not a fact. So if they have an opinion, are they really short on it? Are they able to make money off it? Means they will be very rich if they're true. But people who are actually buying the stock at a certain price, they are putting billions of dollars. They are putting their money in it. I would rather trust that and try to figure out what is the reason why people are betting on it rather than saying, oh, it's definitely a bad investment. So that's how I analyze markets. That's how I focus on that money balances everything. If there's really a general belief, smart money will automatically bring the price down as we find there are problems in thesis. As of today, market is betting in favor of it because market is analyzing over and over again and willing to pay that premium. That means they believe in the premiums. They believe in the yields. So that is how, again, as I said, you have to be agile. You have to always keep looking at new data. If the price starts going down, you have to analyze why market is losing trust. But we should not be going ahead and saying that something market is wrong. I mean, the market is just betting billions because they are wrong and they are definitely going to lose money. That's not how I have seen world operate or money world operate, because nobody goes out there thinking that they want to lose money. Even a gambler doesn't go out there thinking they have a conviction about something of why they will make money. So it's a matter of anything is, and we did discuss this during one of our investor days, anything can be justified as a Ponzi or a great investment based on how many people trust it. Money is all about common belief. We believe US dollar is valuable. We believe gold is valuable. We believe Bitcoin is valuable. More people believe in it, that becomes valuable. And that is how the money world works. Means we have started from seashells and exchanging all kind of metals for money. So if you go a bigger and bigger picture, 1,000-year-old, you will realize that all these fundamental analysts who are talking about the intrinsic value, what they don't understand is that money was never about intrinsic value. Otherwise, every dollar note should have intrinsic, like we should have never moved on from gold and silver coins if intrinsic value was the main thing. All right, so I think good discussions. I think this is what we want to to promote in terms of macro discussions. The idea is to think critically about big picture views, and I'm glad that these questions are being asked, because yes, it may not match with everybody's thinking, or my goal is to at least give you food for thought, and not necessarily trying to say that there's only one way to think. It's a question of whether you can build your conviction around certain idea, or even if you don't have a conviction, you can at least try to analyze why people have conviction over an idea. And that is, I think, makes all of us smarter over time, because something which is not, I mean, it's, as we say, right, it's either you're an early mover, like some people who came into Bitcoin when it was actually not established. They can claim that they were they were smart, but they were also lucky. But beyond a point, if everybody believes in it, and if you are coming back and questioning it, sometimes you're just late, and you have to accept it. That is how I say, means I can also say I rejected Bitcoin many times before I accepted it. So everybody goes through this cycle. This is where we call the adoption curve. And I think rather than and this is what has happened with Ubers of the world, it has happened with smartphones of the world. Every technology comes with question marks. Even AI is facing that right now. There are a lot of people who are believer in that AI is going to change the world, and there are a lot of people who are saying it's all hype and it will die out in 5 years. So every technology always comes with hype, and always comes with early believers. So we just have to figure out the conviction levels at what level you are. And investment is all about you always gain by coming in early. You always gain by betting on something which is successful. That doesn't mean that even if it fails, that doesn't mean that you were wrong. It's just that it's nature of the thing, which you believed in, others did not believe in at masses, and it failed. And that you should not beat yourself up for being early believer either. So I think this is, I'm sure we are all in Silicon Valley. A lot of people have used to startup investing, or even been working in startups. So this is, I think, the same philosophy everywhere. And I think if we build that philosophy into all our futuristic investments, you will realize that it applies, that what is the adoption curve, and where you are in that adoption curve. So I think good, I think Bitcoin has been discussed a lot in our group, because I think it's an evolving asset class and it is much more difficult to understand. So feel free to bring questions, don't hesitate. So as I'm saying, there is no reason for people to always, trust one view over other. We always get new views discussed here when we ask those questions. But overall, I think, yeah, so summary, what we were talking about is treasury companies, they are growing, there will be a lot of demand. I think last week somebody asked a question. Let me just repeat that are these turning into a kind of a risky proposition? And because we spend a lot of time on this world and we have analyzed it, all of them have a very, very solid books right now. Unless Bitcoin crashes by 60, 70%, none of them are at risk. So if you're reading any reports, otherwise, I would love to read the analysis rather than just a superficial discussion. So at this moment, it's a very, very stable world building on top of Bitcoin. Yes, it can get hot. Yes, it can get heated, and which happens with every asset class. It's not like Nvidia doesn't crash 40%, or it doesn't like other stocks don't crash. Everything gets heated up. As we discussed at the start of the call, right now, it almost feels like AI stocks have heated up. The way Nvidia, Vago, and AMD of the world are trading 100% above their April levels. Yes, AI boom was always there, and this correction was unwarranted. What happened this was not really on solid ground when the April drop happened. It was panic, but still, you can always expect correction after 100% rise in price. So I think that is what we have to be ready with. We have to not question the convictions just because there has been corrections. We have to always zoom out. That the ability we want to build in macro discussions, and that's our goal here. And I won't be surprised if AI results are great and Nvidia corrects 20% from here, because it's just gone up from 87 to 174, which is kind of a crazy run in 3 months. All right. So any other questions, guys? I think it was we can call it a day. Otherwise, I will take one last question if somebody has.
Raman, this is Anshu Bahadur here.
Yes.
Hey, so I was typing my question out, but I'll just speak it out. So, I mean, from a manufacturing perspective, and I'm primarily speaking more from semiconductor manufacturing perspective, looks like it'll be very difficult to bring back manufacturing to the US. And
Mm-hmm.
you're also familiar, and I'm also familiar.
Yeah.
I'm part of that industry. And so while software innovation will happen, I mean, whether it's on crypto assets or whether other aspects of the hardware manufacturing innovation, the base probably will be very difficult to come back, if not impossible. How would that reflect in the macroeconomic view?
So let me put it this way. Even today, TSMC makes most of your high-tech chip.
Right.
China makes most of your other manufacturing goods, even Apple
Right.
iPhone or whatnot. Where is the IP? Who makes the most money? It's still US companies. Like who are like, who is like, if Nvidia is the $4 trillion company, Apple is the $3 trillion company, even though they don't have any manufacturing locally. So I don't think that matters as long as this IP world remains. The risks there are some kind of geopolitical wars where, let's say, China takes over Taiwan, or they block the IP, or they just steal the IP, which in a war anything is possible. If you see what is happening, which is irresponsible, I would say, in a globalized world. What we are doing in a Russian war, we confiscated, like US has been confiscating assets of Russian industrialists and whatnot. They're setting wrong precedents, which create bigger risks in future. Like if 10 years, 20 years down the line, US China are at war over Taiwan or anything is possible. That creates risks because you don't have control, and that is what we call it as a security risk. And if you see, that is what most of the political fight is about, where they're saying, oh, we need to bring manufacturing back and so on. So there's no economic reason to bring that back. Means economically, it's working out great for US that manufacturing is in Taiwan and China and so on, and because they are cheaper places, most of the value, 70 to 80% of the value is brought back to US. Those people are just making 30-40% margins at a very low cost basis, while then 70-80% of the end user margin, where the final sale is coming to US companies. So
So
economically, I don't think it's a big issue. It's a more of a security issue and a geopolitical concern. I don't think there is ever going to be manufacturing coming back to US. And it has to be a World War II kind of situation where they're forced to bring manufacturing back. In a peaceful world, it is going great with the China, Taiwan kind of countries taking over the manufacturing, so which is working for US companies.
So I should have probably sharpened the question a little bit, saying like, more so the AI growth, right? The AI R&D and the semiconductor manufacturing R&D, that's growing much faster in China and Taiwan as compared to the US, right? At least for semi, it's growing much faster. At some point in time, that would have some economic effect. I mean, do you see things
So
similarly,
I've not
or am
seen
I?
any. So I've not seen. I would love to hear why you think about that in terms of why Chinese company is not able to sell a chip in any of these. Because do you think there is any restriction? China does not put any restriction on buying a Chinese product. Already, most of the US companies are getting their manufacturing and the lower tech parts. If you see an iPhone, almost 40 to 50 parts are made in China. But if you look at the bigger high-tech parts, like whether it's a silicon, whether it's a memory, those are designed by either US company or a Korean company or something outside China. So why China has not been able to deliver, a 2 nanometer or 3 nanometer chip, of which is world competitive at an AI scale? Do you think they will not be able to provide at 1/4 the cost? And why would Google not buy it, or Amazon won't buy it? If it is available, if the tech is there, that is not going to be just kept and not sold, right? What's the point of building that? So maybe I'm not reading your question, but I don't think they are ahead on the high tech side. They're ahead on manufacturing, which is very well established. They are good in assembly. They are good in smaller, low tech parts. They are almost owning manufacturing of the world, but that is being used by the world. It's not really. I mean, it's a win-win situation where they are a huge population. They are living based on that low level job of manufacturing assembly. And by the way, if you see India, means I was having this whole debate about oh, iPhone manufacturing is coming back to India and they're very happy, means the only thing which happens is a 5 rupee box, which is made like the cardboard box and made in India. Every part is shipped from China. Only the boxing and assembly happens in India. So what we are not realizing is that most of the tech is owned by US. Most of the low-end manufacturing and labor-intensive part and the robotics intensive part is taken by China. So they are definitely ahead in robotics. I agree with you. But I think technology IP and that is still owned by US and Western world. Like if you combine ASML, if you combine, all the technology companies like NVIDIA, Apple, and so on, and even including the Samsungs of the world in Korea, which is US leaning, there is no real China technology which is at the world scale today, which is top of the shelf in terms of high tech. So I would love to hear your opinion on that and why you think the competitiveness is better. Yes, they are growing from a perspective that yes, they are catching up, but that's where I think the innovation continues improving. Like AI, why there is the DeepSeek moment came and went away because that was just a distilled version of OpenAI. If they do not have OpenAI, the DeepSeek cannot exist. So they're good in implementation. They're good in the value addition. We are not seeing yet any proof of any other country leading the core technology.
So maybe we can continue this discussion one-on-one some other time, but from manufacturing innovations, again, from semiconductor manufacturing R&D, and we did a lot of study at my previous company. The amount of research output that's coming out of the US universities is much smaller as compared. This is peer-reviewed research output, not written papers that just to be counting papers. That's much smaller than the output that's coming out from China. I mean, professors were lamenting that it's 1/10 of the output that we get. And even if you go to like any conference like IEDM or any of the semiconductor conferences, that's totally overrun by folks from China and East Asia, where there's so maybe it's not today, maybe it's not tomorrow, but day after tomorrow, like at some point in time, this thing is going to this research output is going to convert into especially like if you're familiar with advanced packaging, etc. All that is just all based. I mean, they have much more advantage as compared to the US. So that's all.
So I get your point. So let me put it this way. Let me summarize this way. You're right that the recent documentation around improvements and catching up, we call it catching up. Like still they're not leading, as you agreed. They're catching up on the innovation, especially China. I don't think there's any other country either. It's just China which is catching up. And let's assume that happens. Let me put it this way. Let's assume that happens. Then are you seeing China? First of all, China will immediately face restrictions if they build a product which is world class. China is so isolated because of their own policies, because they themselves block everything Western and so on. So it's a matter of also chicken and egg problem. Let's say they advance their technologies good enough. Like, for example, there is this whole debate around, BYD cars are selling a lot in Europe and here and there, even in India. Why? They will never be allowed in the US. Whatever happens politically or from a policy perspective, when US is the biggest market in automotive, they will never allow a BYD car to be sold here. So what you're going to see is there is this whole US has two parts. One is, of course, we are talking about innovation, which is the actual power. And then there is something called soft power. There's a USD soft power. There's a military power. There's a lot of other. This is where we do our geopolitical discussion. So one thing is looking at pure merit of, yes, they're catching up. Yes, they can catch up. And then US has all these controls, USD control. There is military control. There are a lot of other ways US bosses around the world. So we can talk about it. I think this is, as you said, it's a much bigger topic. But overall, I would say, yes, it may happen 10, 20 years. Nobody knows, right? Because the world keeps changing. But is it anywhere near in next 2, 3, 4, 5 years? I don't think so. I think Trump has actually done a full stress testing. We call it, right? The banks have the stress testing and all that. So Trump did a full stress testing with this tariff war. It was totally unreasonable. It was crazy. But this also stress tested US power. Means why China was not able to push back and say, I don't care, I won't negotiate. Go figure out. Because they really need US markets and they are dependent on US. So they are still on the table. They are right now, even during the negotiation period, US is applying 55% duty on China, and China is applying 10%. They have taken really bad terms from Trump. Now look at those things rather than, the speculations which we are doing. Miss China is not able to even go fight at the same level in tariff war. And so Trump is already giving you that signals through the all kind of unreasonable tariff wars he has created. And the good thing is, for economists, this is a positive thing. Like when I look at people who invest money and talk to them, they're very happy that Trump did this because they are seeing this as we got stress tested. We got proven that US is still the superpower. US dollar is still rules, because nobody was able to break away because of tariff war. Nobody said, okay, we will not deal with US, let's do our own. The whole BRICS fell apart. There is not even a meeting. Like Xi Jinping did not even go to the BRICS meeting. Like he just skipped it. So there are a lot of signals coming from geopolitical scenarios where we are seeing that US superpower is super strong right now. And we would have never known without this tariff war, there was all speculation around US domination going away, China is becoming stronger. And what we are seeing is totally opposite. We are seeing that everybody's on the table. Yes, we have this whole political discussion around the negative effects of tariff and all that, which is a totally different discussion. But at least you can see that the dominance of US is not going away.
Okay, well, we'll continue this some other time.
Sure,
Thank you.
no, I think
Thanks for your
these
perspective.
are good discussion. And to be frank, we do this in geopolitics. Like, if you have attended our events, you remember we had talked about a lot about geopolitics. I'm a student of geopolitics myself. I always keep learning. So would love to discuss. And, this, I think.
But to
if you look,
close out that thread, on what timeline you think the dominance is not going away? I mean, like in a 20-year or 50, like on what timeline?
It's impossible for me to know about, anything beyond even 6 months, right? What I'm trying to say is, as investors, we don't have to worry about 10, 20 years. Nobody you have enough time. You're not locking your capital in anything which you cannot move in 10 years. So I don't think you should worry about that. You should focus on what is the signal, because anything which is more than even 6 months is pure speculation. Nobody knows the world 1 year down the line.
So you think Ray Dalio is being a bit fear-mongering?
It's not fear mongering. I respect him a lot. Just like I always respected Warren Buffett, and I did not agree with him on 80% of things he said. But everybody has their own time and their own reason for believing in things. He has become a sensationalist recently. I don't know why. Ray Dalio used to be always very solid with his macro. He has never been good with timing. If you see his history, he's always been pretty bad with timing. He was good at China. He spent a lot of time in China. Now imagine that a person who has built his career, his firm, by investing in China for 20, 30 years, he's definitely biased toward China, right? So he has made money from China. So once you have that, you get a little more skeptical. So I can justify his fear mongering about US and why China is going to gain strength. But I think it's a bias. It's natural. I'm biased toward US because I moved here, I made this my home. I'm probably going to be more biased toward US because US is giving me all these opportunities to invest, and I'm seeing the strength of US. It's natural, it's human to be biased. All I'm saying is, yeah, if he's fear mongering, I don't know why he's becoming a sensationalist. He used to be more muted all the time earlier. But yes, recently they have started creating these videos, and I don't know, they're just trying to catch up with the modern world of marketing, maybe.
But how do you personally check your biases and then adjust for the biases in your own investing?
I mostly look at the data and I see, I think, as I said, like if you have attended some of the events, I look at 10-year data, 5-year data, 2-year data, I look at the trends. You look at, is dollar getting weaker in adoption? Is US investments are slowing down? And as I just said, that one big data point was when tariff war happened, I was equally worried. I was equally worried that does US even have the strength to go and negotiate these terms which Trump is going with? He's going crazy. And but what it came out was, nobody was able to withstand. China was the only one which showed that they are not willing to negotiate, but that took them 1 month. After 1 month, they were on the negotiation table. So what I'm trying to highlight here is, now you know exactly what happened. Like we have data points here. Like, if they were stronger than US, or if they had confidence, because everybody knows inside what is happening in their end. China would not have negotiated, and they would not have agreed to 55% tariff on their goods, while US goods are only 10% tariff. Why that intermediate terms were agreed upon by China? Because they're not there yet. They cannot break away from the US as a market or dependence on US. So again, as I said, like, there is no, you will never be sure. This is why you have to be, as I say, macro and geopolitics. These are the two things which you have to keep learning. You will get new data point every day. You have to adjust, but we believe in looking at the data points rather than speculating. Yeah, these are great theories that world will change one day. It looks great. It's a great TV when you create videos around it, because sensational things sell. But ultimately, we have to look at the data point, right? Means you will see more and more sensational content, because all the online content, all the TVs, all the everything is ad based. For them, clicks matter. Just saying the boring thing which I say will not get me clicks, but for people who are creating those sensational things, they get more ads. So unfortunately, that's why those views get more views and more discussions around them. So that's all I can say. So this is why I avoid all the TV. I avoid most of the commercial stuff, because if there's an ad on it, means we pay a lot at Proflex. We pay a lot for research where they charge us money for data. So the reason we pay them is because we believe that we are paying them, so they are going to be objective, and they're going to share the data, because they have to be true to the data for justifying the premium we are paying them. Free data comes with its own cost. We have learned it from Google. We have learned it from Facebook. All the free data, whether CNBC is giving or anybody is giving you, that is coming at a cost of whatever their objectives are, their motives are, and you are the product there, right? So they are trying to keep selling you sensational stories because you are glued to them. You really want them to keep showing you those sensational things. So that's the unfortunate reality of the modern information world. All right, guys, I think we are over the 5 o'clock. Thanks a lot. Great discussions. And on a Friday evening, I just love this. So let's keep doing this, and looking forward to talk to you soon again. Thank you. Have a good weekend. Bye-bye.